Good morning, good day, happy Monday, and good week. How are you today? Please give me some okay that you can hear me. Perfect. How was your weekend, guys? Was it good? Some rest? Awesome. Very happy to hear that. Very good, very good. All right, so let's begin there, guys. Francis, there is not a live chat. I'm basically talking. If you want to participate, raise up any question, then you can do that. If you have the microphone, of course. If you want something from the chart, yeah. I see the chat, but you can't see the chat. It's like kind of I don't know, limited. I really don't no idea why the GoToWebinar do it this way. So anyway, I see everything. Okay. So let's begin, guys. It's first of all, it's Monday, so welcome to the beginning of the week. For all those of you who are here for the first time, welcome to our family. Monday is our longest session. We are setting up the whole weekly trading plan. So we go through all the instruments, naming it long, short, etc. This is a trading report that you receive right after the live room. Well, it takes some time to create it, so a bit later than the live room. Inside the report, watch this video explaining what's the idea of the report, how to use it in your advantage. On the bottom, you have the watch list. That's basically our watch list, what we are looking to do and how. You click on any of the instruments, it opens a chart for you. That's our idea. Okay, that's the cycle we trade. Scrolling above, you have in the comments the section of the webinars, the most important webinars. There are more, but that's the main ones. In order to be able to understand what we are talking, what we are doing, how and why. And here you have the separation, Forex explanation, pairs by pair, okay, all the pairs included, short-term trading ideas, indices, commodities, CFDs, and crypto. Okay, that's trading report. It comes right after the live room, a bit later. After every single live room, you get a report. That's the idea. And just remember, it's not a replacement for the live room. So whenever you have the chance, even if it's on a highlight, watch the live room live or recorded, just to get the whole idea. Okay, you don't need to specifically watch the whole thing. The pairs you are interested in, that's the ones you better watch, because that's where the full explanation comes. So we go over the report. Where's my report? We go over the report pair by pair. We start with the European pairs and we move forward. Just quick reminder, the last couple of weeks were much more volatile than the previous ones. We got beautiful moves on the majority of the instruments. There is a good chance that this week would be slower. You know, that's the rule of the market. It's not always moving as we would wish. Plus the fact that on Wednesday we have the FOMC meeting minutes might make the first couple of days to be a bit boring. It doesn't mean we have to wait for something specific, because there are great opportunities as they are right now, and let's start talking about that. So the first one is the euro dollar pair that we have been very well shorting right from this period. Now, once it reached our zone, let's put the things on the table and let's understand what do we have. According to the weekly cycles, we got this kind of triple cycle, and this becomes a double cycle correction. The last divergence developing on the weekly is bullish. Therefore, the daily required to be a corrective cycle. Let's go to the daily. Daily is a double cycle by itself, bringing it right to be 1, 2. The first leg of the cycle is a special cycle by itself, and the second leg of the cycle is a double cycle by itself. Great combination. We have beautiful level. We have a divergence on the moving average of the histogram, of the MACD, sorry, and that makes it to be bullish as well. Now we saw the weekly before. We say that daily has to be corrective cycle, meaning daily has to make 2 waves or a range. Why? Because once higher time frame has signs against you, and the current time frame has signs against you, we require a corrective cycle. Corrective cycle could be 2 variations, 2 waves, or a range. This is not new for you, right? So that's the idea of the euro dollar. Now, by ideal, the requirements come with 2 false breaks and higher highs, right? That's the perfect scenario. But because the weekly is a cycle, the daily is a cycle, and the last leg is also a cycle by the 4-hour, we have 1 false break here and already facing a convergence. So that makes it to be a valid setup for further rallies. So the euro dollar switching after a couple of weeks, we were shorting, we are switching to bullish. The bullish move is not expected to be, I would say, too fast or too quick. I think the bears are still in a control. The bearish corrections might be quicker than any bullish attempt, but the way I say that, buy dips would be safer. Buy dips means because we are now in a situation of weekly, daily, and 4-hour chart all together pointing to the bullish side. 4-hour created a convergence idea. We require 2 waves retrace or bullish hidden divergence. So if we get 2 waves, we are looking for the buy setups. If we get a correction and a bullish hidden divergence, we are looking for buy setups. Okay, now take a look on this leg that is currently creating on the 4-hour chart. Most likely this is the first leg. After the correction, very likely we are going to face the second leg, or at least to move inside this kind of range. But the plan for us would remain the same. We want to buy the bottoms. So drops with 2 waves or bullish hidden divergence would provide us the buy opportunities. Now take a look on the first leg from the 4-hour chart, how it looks on the 1-hour chart. Triple. After triple, the best scenario to get is 2 waves retrace and breakout, right? And this is the ideal situation to start and follow for the euro dollar. Now here's a question: could the euro dollar create one more low? The answer is yes. It could make something like that, 2 waves, 1 more false break, and make the move. It doesn't change the plan. The plan is the same. Drops with bullish signs to follow make it a great buy opportunity. And that's the plan I focus this week for the euro dollar. Next euro on the list is the euro versus the pound. According to the weekly cycle, we are bearish because we had a triple cycle, false break, bearish divergence. We are after 2 legs, or at least a range, right? Corrective cycle. Corrective cycle is 2 waves or a range. In order to be able to short it, daily has to fit in with the weekly, and then we get a classical situation. Now the daily is kind of making here triple double. None of the trend lines from the daily, not this one and not the bigger one, are broken. Therefore, for a conservative continuation, we still don't have the signs. However, the daily does have a bearish divergence, which means, okay, so conservative, we don't have trendline breakout, we don't yet have any lower lows, fine. So we can't do it conservative. Aggressively though, there is bearish divergence on the daily as well now, and the 4-hour chart fits in with its own bearish divergence. Now I have one issue with this 4-hour chart. The first leg is good. We have the 2 candles rule applied. So far, so good. The second leg though, we don't have the 2 candles rule applied. The pair is stuck inside, and that's a sign of weakness. So definitely we are looking for sell setups, but we have to remember that because the daily is still aggressive, it didn't create lower lows, it did not break the trend line. Daily doesn't have yet the confirmation with the weekly for conservative view, right? More aggressively acceptable, but then the 4-hour chart has to be clear and clean to go, and it doesn't. First leg is good, second leg is not good, and we can't yet create any breakouts. And that's what makes the euro pound still tricky. Now there is still possibility we're gonna see another false break attempt or anything like that. It's possible, it's doable. Will that? Not sure at all. So my preferences are to start look for sales after the trendline breakout from the daily chart, or at least the 4-hour to become clearer. So make this way, get the 2 candles broken, and then when the trendline is broken, attack. Plus, remember one very important thing here. If you want the 1-hour to go to lower to 1-hour chart and trade that, saying, okay, so 4-hour chart is 2 waves, right? Like 1, 2, there is divergence here, no problem. Each of the legs of the 4-hour has to be a cycle by itself. So we have this, and we have this. Let me just copy here. Okay, very simple. 1-hour chart must be a cycle by itself. That's the idea. Okay, let me ask you this question. The first leg, is it a cycle? Do you have the 2 candles rule applied here? Yes. Do you have divergence applied here? Yes. First leg is a cycle. The second leg, is that a cycle? The answer is no. On the route, this is, if we say this is the divergence we have, right? On the rally, there are not 2 candles applied. Therefore, it's just one leg. And therefore, the 1-hour chart cannot be traded. Simple, right? Remember, if you want to squeeze lower, you must get validation on the higher time frame. Always. As long as the higher time frame is not ready, the lower time frame is just a noise. Remember that, guys, it's so tempting to say, oh, it will be okay, without understanding the risks coming from the higher time frame. So that's for the euro pound. Definitely looking for the sells, but we must make sure that the daily and 4-hour chart have free road for us. At this stage, they are not. Any questions, by the way? As for now, if you have any questions, guys, just drop it in the chat and I will reply as soon as possible. Okay, don't wait for me to ask. Just write it down. I will reply as soon as possible. Euro yen is the next one. Now on the yen pairs, the majors, euro yen and the pound yen, we don't have cycles, because that was a double cycle from the weekly, reached the target of 38.2. That was the next cycle and also reached the 38.2. Therefore, there is nothing to do in that situation. Cycle related, right? If we go to the daily, we should ask ourselves, okay, so does the daily have any cycles for us? And the answer is no. That was the last daily cycle with bearish divergence and never ever, and already paid. Game over. This cycle is not over as there is no divergence ending it. So there is nothing to rely on also on a daily. If we can't work with cycles for a money flow, what do? We work with divergences. Right? Quick reminder, you have the special webinar, multi-time frame divergences, prepared for you previous week. I emailed about it yesterday. You can also find it in the media zone. It will also be added to the report list here once our programmers are back. So based on weekly, the last divergence developing is bullish. Last divergence on daily developing, kind of a double bottom with moving average divergence, right? But this is exactly the same divergence from the weekly. The daily current cycle is here and it's not over. So the best scenario would be if the euro yen can make one more low to make some divergence here, and that would be amazing. So the daily current drop does not have any divergence. 4-hour chart basically creating for us a correction after this cycle. Correction could be in a range, and correction could be in 2 waves. Once that happens, we can still look for the sells, joining one more low from the daily. So by ideal, we want to see the daily making one more low, building the divergence, and then weekly bullish divergence will fit in the daily divergence and would be classical scenario. So meanwhile, on the short term, aggressive, because we don't have the higher time frames cycles, it is for sells. Sell the rallies. Okay, shorter and aggressive, meaning lower risk. Next one, euro versus the Aussie. According to the weekly, we are inside a big range with false break here and false break here. And not just that, we also are at the end of a triple cycle with bearish divergence, meaning we expect a corrective cycle, meaning 2 waves down or a range, right? That's the corrective cycles available after triple cycles. Daily must to fit in. The last divergence from a daily chart is this bullish hidden. Therefore, the 4-hour chart must be a corrective cycle, right? If we want to fit in. 4-hour chart has no corrective cycle yet, and here is why. It looks like a double cycle here, right? It looks good. When you stop for a second and you ask yourself the questions, do I have two candles rule, and do I have divergence? So divergence you do have. Two candles rule you don't have. Everything here inside this move stuck in one candle. Therefore, we don't yet have any corrective cycle. And remember, corrective cycle could be 2 waves. Corrective cycle could be a range. Which will that be? You never can know. It's always one of the 2 options. We cannot predict. When you have 2 false breaks in a row, in opposite directions, the chances to have range are much bigger. Okay, but for us the plan is the same. We get the rally on the 4-hour chart, followed with bearish divergence. We get ourselves the sell opportunity. Francis, how do you determine corrective cycle? Not sure I understand. What do you mean? Corrective cycle comes after, well, at the end of a cycle. So if the, let's say, weekly is triple cycle up, we expect corrective cycle. That could be one of the two options, 2 waves or a range. Have you watched the webinars, Francis, that we have on the list? Okay, so please do. At your own pace, at your own time, please do. It will be much easier to you. Because if I answer now in one sentence, it will not make any sense to you. You have to watch the explanation to understand the logic, not just me answering, to understand the logic. Okay, it's much smarter. Okay, so please do on your free time. Okay, so that's for the Euro Aussie. We are bearish according to weekly. The invalidation for this plan is this high, so we are bearish as long as this top holds. But as you can see, the lower time frame do not yet fit in, and therefore the Euro Aussie could even provide short-term rallies that would be still acceptable before it makes the sell. So we are looking to match the weekly with daily and then with the 4-hour. They have to match. They match in the same direction, boom, you have a trade. Okay, so we are bearish for the long term. We are waiting for the setup to form, and it has to come through daily and 4-hour chart agreement. Since the daily last divergence is bullish, 4-hour must be corrective cycle, meaning 2 waves or a range. Once we get it formed, we have a sell. Next on the list is the Euro versus the Canadian. We were selling this one for a great run. It was perfect. For longer run, we still have where to go because it looks like a triple cycle here. So technically, this one has a room. If we drop Fibonacci retraces, we can see that even to the 38.2, there is still a room, but 50 could be the possible final target. So the idea for us is to sell the chart and start to develop bullish divergence. We want the correction to be from the daily. Daily is a cycle by itself, right? So here we go. Each of the legs is a double cycle, right? That's the blue one. That's the weekly. Each of these legs is a daily cycle. 1, 2, 3. Now forming bullish divergence also on the big lows, meaning corrections to the upside. Short-term buys. After that, very likely we are going to look for sells again based on the weekly cycle. Meanwhile, because the weekly has bullish divergence, daily has a double cycle and a divergence, meaning we are after corrective cycle, meaning buy dips. Okay, Ahmed, that's exactly the 2 ways, range or 2 waves. That's all the possibilities. There is no second option. For corrective cycle, that's what we expect. Range could be horizontal, range could be triangle, channel, anything of that terms, right? The ranging patterns, but range or 2 waves, range or 2 waves. Okay, so that's for the EuroCAD, meaning we are after buys, drops, look for buys. Very simple, pretty much the whole idea. The first target we would be aiming here is this and this, and then according to the daily, we might slightly go even higher. Okay, so drops are for buys. Short term, why short term? Because the weekly cycle is still bearish. So short term rallies only. Next one on the list is the euro versus the franc, another pair that we have been shorting for a good while. We got ourselves the first target that we wanted to see. There is still a possibility we are going lower towards 111, but as for now, weekly looks like a possible bullish divergence, meaning daily has to provide the correction, meaning we require two waves or a range. Okay, so on the short term, exactly like the rest of the European pairs almost we saw, we are for short-term rallies. Okay, that's for the euro franc. So I would not be surprised if we get anything like that. For example, it could be a ranging pattern right now. It could be some ranging channel to the upside, or it could be simply classical two waves. But it does not change the plan. We are after buys. Buys to two waves or bullish divergence to form. Providing the buys, we are looking in that direction. Short term, remember that, guys. Why do I mention the short term? Because how many times in the past you found yourself saying, oh, wow, that looks amazing. Let's attack here and enjoy from 500 pips. And the idea is good, but if the higher time frames don't fit, the chances for you to end up correct and profitable as you wish are very low. So it's important to not just to choose direction, but also to remind yourself, is that acceptable for long run with the daily and the weekly, or just a short run? In that case, it's still the short. So that's for the euro franc. The next one, the last one of the euros, is the euro versus the kiwi. And here you go. According to the monthly, and I show the monthly because it's just clearer. We got a triple cycle, so we are after two waves or a range. We also have one false break here, one false break here. That makes it to be a very possible range, right? So for us, the plan is buy dips for the long term. Weekly is building a cycle by itself and divergence developing, bearish divergence developing. Daily is a cycle by itself with divergence developing. 4 hour must fit in if we want to sell. 4 hour last divergence currently is bullish, so it doesn't fit in. So in order to be able to trade the sells, we require the 4 hour chart to fit in as well, right? Once the 4 hour becomes bearish divergence, or two waves move up, we are good for sells. Short term. Meanwhile, both directions are completely tradable because we don't have this synchronization from the time frames. So the possible way is on the short term, look for buys until the 4 hour would fit in with the daily. So that could be something like that. And then once it fits, we are good to go. So Euro Kiwi at this stage is short term only, but both directions are in play. There is nothing clear to say for one direction yet. And we're done with the euros. Any questions about any of them? All right, cool. So let's continue the next pairs on the list. Pounds. Pound versus the dollar, a pair that we are waiting to finalize its low and provide us the buys. So the pound dollar basically is a bullish hidden divergence with daily making double cycle. That's the first, and the second leg is a cycle by itself to 161.80. Right? So this is what we have here. Bullish divergence is in play on the moving averages, on the big one, right? On the small one, this cycle, there is no divergence yet. Now, in order to be able to stop the weekly movement, we require false breaks and convergence. We have a false break forming here, right? But if we check the last two candles rule, we understand that we don't have a higher high. So we don't have two candles rule in play. And we also don't have any higher highs on the chart. So we don't have any bullish appearance yet at this stage. So the best thing for the pound dollar at this stage is yet short-term sell rallies. Why short-term sell rallies? Because weekly and daily start to prepare for us the bullish divergences. So that means a bullish divergence is coming. A bullish pressure is coming. Okay? And that's what makes it in the short term. Now, the best scenario for us in the pound dollar would be if we get one more low, false break, and we start to climb for higher highs. That would be the ideal scenario. As long as we don't have it, pound dollar remains bearish. As for now, for the short term, because before we got on the long term, right? Now it's a short term because we have all the levels reached, cycle levels, and divergences from the higher time frame, right? Pound franc, pretty much the same scenario. This one is one of my favorites for that reason. It's a triple cycle, it's a double cycle movement, it's a bullish hidden divergence forming here. It looks like a bullish future. Daily is a cycle by itself. We are dancing around 61.8. There is divergence here. Oops. Between the lows, right? But take a look what happens here, pretty much like the pound dollar. We still don't have, guys, can you hear me? Because I see here a sound problem notification. Can you still hear me well? Oh, okay. So it's probably sound local. Thank you. So the pound franc has, first of all, no two candles here, so this is a sign of weakness, right? We don't have higher highs, but more than that, it does not yet have any two false breaks and convergence. Correct? We don't yet face that. So we have one false break in that place with moving average in play. We don't have the turn around. And after the rally, we start to face immediately bearish divergence. So we don't have the two in a row. We don't have two candles rule broken from the daily. That's all signs of weakness. So on the short term, pound franc can still try to make one more low before it switches. So our plan, as it was on the last couple of weeks, or actually more, 3 weeks now, is short-term sells. Long-term, we are now come closer than ever to the possible turnaround. I think, though, it will take some time to complete and develop. Few weeks, maybe 1, maybe 2, maybe a bit more, but the structure starts to be amazing. The daily and the weekly starts to fit to each other. Ideal scenario would be this. And then look what will happen. We will get special cycle here, special cycle here. It would be ideal for buys. So let's wait for that to happen. But there is a great possibility for that. Meanwhile, because there is no full turnaround, we are still for sell the rallies. Short term. Pound versus the yen. Exactly like the euro yen, pound yen also does not have any cycle in play. That was the 138.2 reached the target. Then we had this one 38.2 reach the target right here. So we don't have any cycle to work with. The last pressure from the weekly as it goes is still bearish. We don't have any divergence completed. MACD did not turn bullish yet. It holds the bearish slope. So what we do have now is extension of this, and that means 161.8 definitely a possibility until it will create a divergence. That's from the weekly. Daily does not have any divergence by itself. There is no divergence on the histogram. There is no divergence on the moving averages. Therefore, the plan is bearish. So we drop to lower time frame, 4-hour chart and 1-hour chart. The plan is bearish. Every bearish hidden divergence, every 2 waves or every range is a sell opportunity. Why here bearish hidden divergence is also acceptable? For one reason. The daily and the weekly are bearish. If they are free to go, hidden divergence is in play. Why? Because hidden divergence is a trend continuation divergence. Very simple. So that scenario, lower highs on the chart, higher highs on the indicator, is a great sell. Pound yen, still bearish. Aggressive though, we don't have any cycles in play, not weekly, not daily, just an expansion ongoing. No signs against, that's why it's bearish. Next one, pound versus the Canadian. The pair is developing 2 waves. And starts to show a possibility of a divergence. It's also a bullish hidden divergence. Small, slow, but this is the one that is currently forming. That means that the daily must be a cycle by itself to the downside. So that's what we had before. 1, 2, correction. We are coming very close to the 100. And we start to see the divergence slow down, right? It's right on the last part. Well, we have to compare the lows here. We figure out that we don't have any divergence. And if we compare the lows here, we figure out that we have no divergence. So the last part forming is the only one where we can start to see the divergences. And that's what makes the pound CAD very possible. Continue to the duplication area right here. For the divergence, complete the 2 wave cycles and start the rally. So pound CAD remains bearish on the short term with ideal situation, go for sells. We require 2 false breaks and higher highs to make the retrace. As for now, we don't even have 1 false break. Why this is not a false break? Because there is no divergence. Therefore, our plan is still sell the rallies. So pound CAD short term, yet bearish. I would not be surprised if we are going towards the 164 and lower area. Pound versus the Aussie. According to the weekly, that could be translated and shown as few cycles. Double with the divergence here. Special with the divergence here. Or just triple. 1, 2, 3. Triple descending. So if it's a double, then 38.2 reached. If it's triple, 50% not yet reached. Or see, too many ifs in that situation. Nothing clear, nothing obvious, right? To gain better understanding, we're going to the daily. What do we have on daily? On daily, we have double cycle and bullish divergence. There is a good chance that the 38.2, which we just saw from the weekly, and let's put it back, there is a good chance that the 38.2 fits in with the 61.8 and game over. We are for buys. Last divergence from the daily is bullish, meaning the pair is for buys. Right? That's the understanding we have here. The 4 hour must fit in. 4 hour is a bullish hidden divergence. The turn to be a continuing divergence by itself. Meaning we need the 1 hour chart to fit in, and then we are good to go with the buys. That's the whole idea. Now, if the 4 hour chart is 2 waves, 1, 2, each leg must be a cycle by itself. 1 hour chart is a cycle by itself. There's divergence in play here. And the second leg also forming a divergence by itself. But the last divergence from the 1 hour chart is bearish. So we need to make sure it turns bullish, and then we have the triple time frames confirmation to go and to trade. So pound Aussie preferences for the short term are bullish. One more thing to pay attention to, because the last divergence on the daily is bullish, 4 hour must be a corrective cycle, 2 waves or a range. On the 4 hour chart, we currently have 1 leg, not 2, 1. Why 1? Because there is no 2 candles rule in play here, therefore there's not correction. It's just 1 straight move. So the idea to get a second move becomes very, very, very possible. So for me, for the short term, pound Aussie is bullish, meaning looking for buy setups. Okay? Once we can fit in bullish divergence on triple time frame, any combination, weekly, daily 4 hour, or daily 4 hour 1 hour, or 4 hour 1 hour 15 minutes. Once we have the trio, we can go and trade. Pound versus the Kiwi is the final pound pair. Now this pair is a bit of mystery because according to the monthly, that's once in a lifetime maybe buy opportunity, but it's for years, investment for many years. To be able to follow that, the weekly must be bullish, right? The weekly is kind of a cycle by itself, triple ascending, which means we are after 2 waves down or a range. 2 waves down we never got. range we did. So we want to go and buy the bottom of the range. Looking on a daily chart, that's where the range comes in. False break, and we build ourselves a range. Remember, range comes after false breaks, yeah? That means inside the range, each leg must be a cycle by itself, and we want to buy from the bottom. Right? That's the bottom line here. At this place, the pound kiwi is stuck inside the middle. That simply means there is no obvious, clear thing to do with the pound kiwi right now. And that's why this pair is currently suitable for both directions trading. And the best thing to trade that is to fit in, because long term is still not organized, not structured. The best way to do here is to fit in short terms. So 4 hour, 1 hour, and intraday could provide opportunities. That's the only way that it could be traded. Last divergence on the 4 hour here becomes bullish. 1 hour chart, last divergence is bearish. Is that organized? The answer is no. Can that be traded? The answer is no. Once we can fit them in and they all, 4 hour, 1 hour, 50 minutes, for example, they all give us the free to go direction, all the 3 time frames are lined up, we can trade. Besides that, there is nothing to do with this pair. And that's why it is, from all the pounds, on my last of the list as for now. I think there is a good chance we are going to see something like that and that. And I wish we see that, because it should become an amazing buy right after. Will we see that? I don't know. It's just a wish. It's not a fact. And we should trade facts, right? Not wishes. So that's all from the pounds. The most interesting ones, as we saw, pound franc, pound CAD are pretty much the most interesting one. Then pound yen and pound Aussie fit in the category as well. More aggressive, but also fit in the categories. Any question, guys, about any of the pounds? The next pairs on our list, dollar pairs, and then we move to the Pacifics. Dollar yen, we are bearish. 110 area, our first target, which was pretty much reached on the previous week. Possibly taking and clearing also 109. At this stage, nothing bullish on the pair. The last divergence pressure is bearish. No slope changed on the daily chart. Therefore, dollar yen is still bearish for us. It's pretty much the same from previous week, so it doesn't change. And the last setup we got was here with the bearish hidden divergence. Sorry, not from this line, from this high. It's more aggressive because we don't have a positive high here, but that's still the direction. So dollar yen yet is sell the rallies. We do need to start to pay attention to divergences, possibly short-term developing against us on the 4 hour and the 1 hour. That could turn to be triple cycle here with some kind of corrections. Definitely possibility. But as long as the daily chart not stopped, divergence not triggered, the pressure is bearish. Dollar versus the Canadian, pairs of which is a mystery. According to the higher time frame, it looks like a triple double and a breakout. That means possible sky. If we fit in the expansion of this cycle, we learn that 161.8 could become next in play. 100 not in play because the first leg is shorter than the second leg. So 100 cannot be in play. In order to be able to trade that, we need corrective cycle. Daily was a corrective cycle here with a bullish divergence, but right after that became bearish divergence. So daily now doesn't fit in the weekly anymore, right? That's where it becomes tricky. So dollar CAD is, according to the weekly cycle, has the room. According to the weekly divergence, last divergence is bearish. Last divergence from daily is bearish, and here is suddenly where the divergences don't fit in the cycles. A mixed match. The 4-hour chart, we want to see lower lows. We don't have them. That means it can become a range, right? Falls back on the top, possible falls back on the lows. So from my point of view, on the short term, aggressive, due to all the conditions just explained, right? The cycles don't match the divergences. That's not a good sign. So on the short term, from my point of view, dollar CAD is acceptable for sell. I would not be surprised if we are going for deeper expansion of this first cycle, meaning maybe all the way down to 128 zone, and that will fit in with the triple cycle of the daily. So there is a good chance we are aiming here at the end. So short term, from my point of view, the idea is bearish, and to be very specific, the invalidation should be pretty much if we close and hold above this top. So not just an empty spike. Empty spike would still make it a range, right? But close above and hold above will make it invalidated scenario. Meanwhile, dollar CAD for the short term, aggressive, meaning small risk, for me is bearish. Why short term? As I said, because for long term, I suspect we are going for something like that. Of course, I might be wrong, but that's what I see at this stage. Dollar franc is the next one, and dollar franc is very simple. Is still stuck inside this, doing nothing. Therefore, I'm not going even to waste the time here to elaborate further, because it is short-term direction traded for both, completely both. There is nothing clear to rely on at this stage. Everything here is stuck inside these two candles, 1, 2, and that's, you know, my view for such situations. Last on the list. Okay. Because the Euro Aussie I explained before. Everything is there covered. Okay. Watch the recordings, or after that I will reply in the chat. Okay. Just want to continue with the list. All right. Pacifics. Aussie dollar. We are after buys, and here is why. Just a quick reminder. That was the previous scenario, so we expect 2 waves to the upside, or at least a range. Daily is 61.8 of this cycle, while each of the legs is a cycle by itself. The divergence, of course, is in play. 2 false breaks are in play. One here, second one here. Divergence in play. No higher highs yet, no daily trend lines yet, but the 2 false breaks plus the magnet zone plus the direction from higher time frame make it to be bullish. So we are after buy retraces. 1 hour chart seems forming triple cycle here, possibly, or special cycle. It fits more here, possibly something like that, where after that we will be looking for 2 waves and a breakout, or the alternative for 2 waves would be a range, right? And then we are trading the bottom of the range. So our plan, buys, invalidation, last low. by dips. Next Aussie, let me just find that. Aussie Kiwi. Now Aussie Kiwi for the long term we are bullish based on the special cycle from the monthly. We also are in a range, so every drop we are for buys. Weekly as well, it's pretty much the same, right? Daily, however, is 100% cycle, right? In classical duplication. 1, 2. Every leg inside this cycle is a double cycle by itself. Bearish divergence in play, meaning at this, as for now, the long-term buys are over. We expect short-term corrections. 2 waves or a range. So that would be pretty much what we will be looking to do. And from there, again, back to buys. So Aussie Kiwi short-term acceptable for sells, looking for sell setups. Of course, if we get them, right? It's not just, oh, okay, so if it's bearish, let's sell. No, it doesn't make sense. We must get a setup with any of the strategies you use, right? But first of all, get the definition of the direction. After that, the strategy. That's the road map. And long term remains bullish. So once we get the 2 waves, we are after buys. Aussie franc. The weekly chart keeps it inside this range. 2 waves down movement, divergence, developing, daily, and divergence, developing. So we require false breaks and higher highs. Never got that yet. Right? No 2 candles rule, nowhere in play. So we don't have official turnaround sign. So Aussie franc could easily make some noise, some crazy noise here before making one more low. Aussie franc, totally tradable for both directions, short term only. Preferably though, buy dips close to the previous low or with a new low. Preferably. Why? Because the fact weekly and daily start to develop bullish divergences. If we want to trade the buys, weekly bullish, daily bullish, 4-hour chart must be bullish, and currently it's bearish, which is not good. Okay, so we must fit in, and then we have ourselves the setup to trade. Aussie franc, nothing clear, nothing obvious, and we are in both directions, short term acceptable. My personal preference is dips, ideally with new low, and buys, but that could be also closer to the previous low, so something like that, also possible scenario. As long as we don't have that, they both are in play. Aussie versus the Canadian. We were bearish in our view previous week. We got the move down. It was beautiful. And now, look what happens. Weekly. This is one. On the bottom of the range, first range, smaller one, still has the room for the bigger range. Starts to develop bullish divergence. Daily, double cycle with bullish divergence on the moving averages. Also divergence on the histogram here. Four-hour, once again, has no false breaks in play, validated with higher highs. So we can still pretty easy get double wave and sells here. Short term, both directions are in play. From my point of view, exactly like with the Aussie franc, the best thing to do would be to buy the previous low or new low because of the divergence developing from the higher time frames. But here, because the weekly suggests a possible bottom of the bigger range, then the two-way opportunity. Okay, so Aussie CAD, both directions are completely in play. Short term, we can still look for to sell the rallies. Long term, we would be after buy the lows. Keep in mind this is aggressive, nothing obvious and clear because we trade against weekly and daily divergence, so it must come with a very small risk if traded. Remember that, very, very important. Or the best thing is to skip, just to skip such opportunities. When it's not clear, not synchronized, skip. There are plenty of others. And OZN is our last of the Australians. Here you go. That was our idea basically, the triple double. So we are bearish for a long time now, but we do need to pay attention to that cycle developing. It's kind of a triple, bullish divergence developing, and I said developing because the MACD did not yet trigger to the upside. Daily, this is the situation as we have it, also developing the divergence by itself. So that requires a turnaround, false breaks with higher highs. Right? That's the idea. We have one false break, which is here. We never got a second one yet. We don't have a high here, so we can't say, you see, it doesn't fit with anything inside. The only thing is here, but that's not a high. So OZN still not convincing as for the buys. So we require one more low before we switch to bullish. Or the alternative to false breaks, by the way, the alternative is always, of course, alternative to the false breaks. And that's 1, 2, 3, 1, 2, breakout. So triple push the direction, two wave, correction, and a breakout, right? That's always the alternative to false breaks and convergences, always. So meanwhile, OZN preferably is sell the rallies until we don't complete the turnaround sign. The way I see that, it should be able to take us towards 61.8. It's slightly lower, like 79, 78, and the 161.8 of that pretty much on the same place. So we do need to pay attention to this divergence. Once it's triggered, we know game over for the sells, but because it's not yet completed, the idea, the best idea, is still sell the rallies. So two waves on 4-hour chart, and we can start looking for the sell the rallies. So the best plan here, 1, 2. Each of the 1, 2 should be a cycle by itself on the 1-hour chart. Once you confirm that, here is your sell. That's the idea. New Zealandian dollar. Let's go over the cycle here. So based on the monthly, we got double cycle to the upside. Paid long time ago. Since then, we have no real cycles going. So what we have here is this cycle, duplication in play, right? Divergence is forming, meaning we are possible buys. MACD seems to retrace. The daily chart, the first leg, cycle, well, here it could be also like a special cycle. So each of the legs is a cycle by itself. We got a false break on the trend line or bounce on the trend line. We have the divergences in play, which is the moving average divergence. We don't have any trendline breakouts. We don't have higher highs yet, so it's not a conservative retrace. 4-hour chart does not have two candles rule for us, correct? No convergence in play in that situation. Therefore, there is no conservative retrace yet. So New Zealand dollar, every 2 waves, ideally with new low, is a buy, or 1, 2, 3, 1, 2, buy. Keep in mind that the current scenario is bringing it, like the Aussie dollar, like the Euro dollar, into triple cycle on the short term. So that could be the second. And that would be the first leg of the 4-hour chart. That would be the second leg of the 4-hour chart. As for now, every bullish setup is short-term only because the daily does not have trendline breakout and no higher highs. So it doesn't fit in. So as for now, every possible rally after retrace is short-term and aggressive, meaning lower risk. Why? Once again, because we don't have yet daily making Fallsburg higher highs, Fallsburg trendline breakout, and even the 4-hour chart doesn't have it. Okay, so it's important to remember that. That's all. So every rally for us, well, preferably bullish, but on the short term, and only due to the fact that we have cycle on the daily, cycle on the weekly, bullish divergence on the daily, bullish divergence on the weekly. We don't have the turnarounds with higher highs. We do have on the short term, on the first leg developing on the 4-hour chart, we do have triple cycle on the 1 hour. So that's the case we are looking at. Next one on the list is the New Zealandian versus the yen. Pretty much exactly like with the Aussie yen, but here we kind of have a range. So most likely we're aiming to the bottom of the range, which is 161.8, slightly below 161.8 of the expansion of the cycle. Daily does not have any divergence on the last part. Therefore, Kiwi yen is bearish. New Zealandian versus the Canadian. Another pair that we were riding and riding beautifully. According to the long term, it has much more room to go. So somewhere here, it's for the long term. However, weekly starts to show possible bullish divergence. Daily is a cycle by itself and a bullish divergence on the last part. That means we require correction. So short-term rallies before long-term sells. So Kiwi Cat switching short-term buys, drops, and we are after buys. Okay, and the last New Zealandian on the list is New Zealandian versus the franc. No divergence on the moving on the histogram, no divergence on the moving average. Basically makes it very clear and simple. Bearish. No divergence on the weekly formed and confirmed, not on the daily. Therefore, we are after sells. 4-hour could be bearish hidden divergence, which it is right now, but in that case, it must be a cycle by itself on the 1-hour chart, and it's not. Even though it looks like a cycle, when you dig deep, you understand that there are no two candles rule in play. Therefore, it's not a cycle. So we require to get some clearer the waves before we are switching to sells again. Kiwi franc is bearish. And the last two pairs on the Forex, CAD franc and the CAD versus the yen. CAD franc, I am bullish for the long term due to the triple cycle, expecting this. The weekly is basically doing kind of nothing, just a range, nothing more than that. No cycles we can rely on more than that. And the daily last divergence is bearish here. Okay, so this one looks like possible bullish here, but we have no two candles in play, so we don't treat this low. So the last divergence from daily is bearish. Therefore, long term is in disagreement. Short term, meaning short term bearish move is acceptable. For long term, we will still be looking to match daily with the weekly and go for buys. So cat franc, bullish for the long term, acceptable for sells for the short term. In order to be able to fit in the short-term sells, daily should fit with 4 hour and with 1 hour, and then we can short-term sell it. And the CAD yen pair that we also are bearish with, the idea here is very simple. Last divergence is bearish hidden on the weekly. As per cycles, we are inside this situation of triple double breakout, which is developing into pattern. So for us, it's a sell. Daily, here we go. Last divergence on daily was bearish. Then we got the convergence. So for us, it's a sell. That's all from the Forex view. Questions? Excuse me for a second, guys, just to get some drink. Any questions, guys, about any of the Forex? Well, Swiss yen is the only pair I try to avoid, Stefan. To be honest, I don't like this pair. I don't like the Swiss and the yen, especially in the correlation. Both are the most manipulated currencies. Where is that? I see I even don't have it on my favorite. But my idea is, well, as for now, bearish, but in general, I think it's building a triple double. It should stop somewhere here and start the rally. Okay. Which would be the top 3 opportunity for the week, in my opinion? Long term or short term? The CAD pairs, the Euro CAD, Kiwi CAD mainly, and the CAD yen, and the majors. The Euro pairs I like as well. Pound I like less, to be honest. The pound I like a bit less. All right, commodities, gold and silver. So the gold has reached the 161.8, cleared all the stop losses of the early entries, but now fighting it. However, it has no divergence in play on the last run. It only has one here on that scenario, which is okay, because if we take a look on the second leg, it is a level by itself, 161.8 by itself here. So that's fine. We have no no divergence on the big view, and that's what makes it very tricky. Now, that's daily. Weekly also has no divergence, right? So technically, it can still continue lower. Weekly is yet bearish. In order to be able to trade with the weekly, daily must fit in. Because the daily is as now short-term possible retraces of the divergence and the cycle by itself, we accept short-term rallies, which after very likely will take us even lower. So gold short-term acceptable for rallies for longer run, it's still bearish. The best scenario would be if daily would make this to be bearish hidden divergence, and 4-hour would be double cycle, so something like that. And here divergence. If that happens, we have a wonderful sell. Meanwhile, it's a short-term bounce. You see, it also fits like the Aussie dollar and the Kiwi dollar. Triple, possible double, one more rally. That's the short term. For the long term, as I just said before, I would be still looking to sell the rallies. Silver, same story. We got the investment trigger previous week, 1465, right here, but no divergence in play of the day. That's a warning sign, and that's why I asked you previous week, get out from the investment. I suspect that after a little pullback, we are going to continue lower. That could be to the area of 13 plus, or even 11. Even 11. We are still in a long-term range here, but the daily has no divergence at this time being, so it doesn't have any reason for buy. So silver, from my point of view, still remains short-term sells. Oil, we were bearish on the oil for the short term. The idea remains still the same. This one has a monster cycle here. It could be special, it could be a triple descending, whatever we name that, it would be correct. There are divergence in play, so it's a sell. Now it looks like a divergence developing here, but again, we're stuck inside, right? No false breaks confirmed with higher highs yet on the 4-hour chart. Therefore, the gold is still bearish, preferably. Two possibilities for us is to get this completed, 2 waves, or to make it, to turn that into a range. Which of the scenarios will trigger, we don't know, but short term remains bearish. Sell the rallies yet. And one more, natural gas. Sorry, natural gas also remains bullish for us. We are running from 260, so we expect further continuation. Straight or after corrections, all acceptable. We are bullish. One more to pay attention to is sugar, which now starts to be very interesting. Yes, it's not healthy, but the levels are amazing. We have the cycles here. We have the divergence in play. Everything fits in around the area of 10 and lower. And the daily chart also makes it to be. So what we are looking for, false breaks and convergence. We got one false break before. We are looking for the second one. We are looking for convergence. So if that makes it here, or will that make it one more low, we can't know. Once we got the convergence, we got the buys. All this drop, there was no convergence, and that's why we are still waiting. Very simple. Rules are rules. That's for the commodities. Okay, sugar starts to be great zone to follow. As per, where is that? As per stocks, Deutsche Bank, we are bullish due to the weekly cycle, triple cycle, and daily special cycle by itself. We are for buys. We have Teva bullish, and they got boosted previous week due to the approval of one new pill. We are aiming 28-29 final target. That's our destination. And Facebook, we are short. Okay, bearish. As long as we don't have the divergence formed against us, we are bearish. So that's for Facebook. Indices, German DAX, we are bearish as well, mainly from the weekly cycles. We also got this convergence, right? So we are for sales, any rally. That's our plan. And Nasdaq, we are also bearish, but we do want to see at least trend line broken, even not talking about lower lows. So at least the trend line broken. As long as it didn't happen, the sales are completely short term and aggressive. What could happen here is one more fake high before the lows taken place. So no rush into the American indices for the short term. And S&P also, no trend line yet, no lower lows yet. It can continue and make it. Short term sales could be in play. Long term, it does not have nothing yet. So no need to rush. And cryptos, we had our main one previous week, that was Ethereum versus the Bitcoin. We reached the level. So from here, I start to expect bullish retrace. So looking for buy setups. Ideal scenario, of course, once we get some kind of a false break. So if we get here a false break, we can start talking about the buys. Trendline breakouts, higher highs, etc. The rest, mainly the Ripple, one of the interesting. I'm looking for triple cycle push first of all. As for now, we have only two, 1, 2. So 3 would make it ideal. After that, 2 waves correction and rally. As for now, the best one on the list is still the Ethereum versus the Bitcoin, and we have one running for the long term, which is the ETP. If you remember, a long time ago, since the breakout and the higher highs. Okay, so partially already booked. Now on previous week, no, where is my measurement? Previous week, 50% of the triple cycle also reached. ETP completed its destiny with 3 times higher than the invest. So from the level of 1, below 1 it was, all the way to above the 3. So ETP is, from my point of view, game over. It paid amazing. The rest, still waiting for that to form. We have nothing yet clear, formed, and convinced. Ethereum versus the Bitcoin is still one of my favorites, and the Ripple to follow up for the triple cycle with 2 waves corrections. That's all for the week, guys. A lot of setups, a lot of interesting things to follow. Don't forget, we have the FOMC on Wednesday. There is a good chance that the market will be waiting for that event. It's too much for today, Hamza. I agree. I agree. But you know, it's Monday. We have to cover and prepare the whole week. Now I have to prepare the report, so I have a double work. You can rest. I have to complete the report. So enjoy your day, guys, your night, and your week. Thank you for being here. Once again, welcome to all the new guys. I hope you are well scared after the Monday session, so you know what to expect. Just joking. If you have any questions, guys, we will be on the Telegram groups, so direct it to there. Happy Monday, happy trading week. Thank you for being here.